Well, this is indeed a Vikas ka budget. The last budget of the government before the election cycle, a budget which was really based on Vikas, a budget which has ensured that the economic momentum continues, a budget which is high on intent, big on vision, and a budget which really captures the essence and the necessity what will be required for India to really become a $10 trillion economy soon. It could be called as one of the shortest speech of by any finance minister, but it's a speech which was high on impact, big on intention. No changes to both indirect or direct taxes. It was not expected. But what is important here is that in terms of commitment, which is what markets should look at. Number one, fiscal deficit numbers. Much, much lower than what markets was expecting. Number two, the commitment towards capex, it's still a double-digit number. And C, really getting India ready for what the future should be in the world. I think this budget, in my book, has really ticked all the right boxes. It was not specific, Aisha, in terms of announcements. It was not big in terms of setting the in really setting the nuts and the bolts right in the short term.
Yeah.
High on intent, promise of stability, easy to decipher, and it's a budget which really sets the tone for not next 1 year, not next 5 years, but for next 30 years.
Oh yeah, absolutely. And even the FY25 capex outlay which is announced, I think that to my mind really sort of stood out. The fact that it's at 3.4% capex to GDP, that in itself is a mighty figure. Now, what one needs to see is whether that's a tall order or not. We'll try and decipher the math a little bit more for you. But I think the phrase of the day was FDI, first develop India.
First develop India. We always looked at India as FDI always meant global help, but right now FDI actually has got a different meaning. So the whole word Atmanirbhar Bharat, I think the Atmanirbhar Bharat now is really it is in sync with what the vision of the government is. So this budget is big on intention, and now I think the next budget would be high on implementations in terms of the specifics. I just want to mark the markets here. We've got a budget wall for you.
Nothing is happening in the market, Nikunj. I don't know why, but these numbers, both on the fiscal deficit or the capex outlay, it's not moved the needle at all, at least at an index level.
So Aisha, this budget was not expected to move the market at all because this budget was in a sense A, vote on account. There were limitations and restrictions. B, the budget policy over the years has been quite transparent. So if you call it as a budget where, frankly, if you ask me what were we debating, there were two debates in the morning, that local economy is strong and global economy is looking slightly uncertain. How will that balancing act move? In that, the finance minister has ensured that India is getting future ready by sticking to the fiscal deficit glide path, ensuring that the capex commitment is high, no tinkering in terms of direct or indirect taxes. Then I should whole good old debate, okay, it's vote on account. Will it be populism which will take over? There's no mention of any large schemes. There is
nothing on taxes.
No, taxes were obviously nobody's expecting anything, but the whole point that okay, rural economy is under stress, they'll have to do something, there would be big dole out, there would be something to farmers, there would be something to the rural economy, maybe some popular scheme. Nothing of that sort unless I've missed something. So this is the budget. I think the reason why markets are not moving at all is because when the event risk is behind us and when the expectations are low and you pretty much get things on expected lines, then it'll be back to earnings, it'll be back to numbers and valuations. Normally the budget is like a earlier, Aisha, budget used to be a 1 month event. Then it became a 1 week event. Last time it was a 1 day event. I think total will be a 60-minute event from a market standpoint.
Absolutely. Let's take it across to Sunil Singhania and find out what he's making of these last 60 minutes. Sunil, what's the first take?
Frankly, nothing was expected, frankly. I think the most excited were the media guys. And, it's a vote on account. Anyway, as Nikunj was mentioning, over the last 4-5 years, the relevance in terms of major decisions in the budget has been reducing. And I think at least as far as we were concerned, we were expecting the same to be carried forward. It's a vote on account. And even if it was a full budget, we just expected what was being done over the last 3-4 years to be carried forward. So what was being done? Obviously fiscal prudence. I think there's a little bit of surprise with fiscal deficit target of next year coming at 5.1%. I think the bond markets are already reacting to it. To some extent, that would be positive. Also, all the statements which were made over the last 2-3 years by the government and by the Prime Minister have all been reinforced. So whether it is housing for all, the new solar rooftop generation for 1 crore households, focus on infrastructure, the plan expenditure increased from 10 lakh crores to 11.1 lakh crores. I think it's all in the direction of what was happening over the last 2, 3, 4 years. So I think it's business as usual, and I think that is should be taken very positively, because I think that is what long-term planning in a vibrant democracy, in a fast-growing democracy is all about.
I also have, Prashant Jain, and his voice, his idea, and his differentiation part really matters. So, Prashant, so nice to have you. You've got your firm's name is 3P, but everybody's added a 4th P to it because you have invested in PSU stocks. So, has the budget done enough to ensure that the 4th P of your investing, which is PSU stocks, that's been taken care of?
Okay. 2 seconds.
Nikunj, thank you for having me. And I think, see, PSUs are represented in core sectors of the economy. And greater focus on capex, infrastructure, railways, defense, make in India. I think all of these are good for PSUs, and there are absolutely no surprises in this budget. This is a very good budget in my opinion. As you mentioned, bulk of the policy reforms, big changes are behind us, so no change is good. And Indian economy is doing extremely well despite few headwinds that it has been facing. Fiscal deficit is steadily coming down, which is a headwind for growth. And despite that, we continue to grow well. Exports have been weak, and money conditions have been somewhat tighter. And even the external capital flows, because of tighter liquidity conditions outside India, we have seen a softening in that. So despite the economy doing well, suggests that we are indeed a very good shape and on a good wicket. Yes.
Fiscal deficit and the capital expenditure number, the capex number, which in a sense is the most important indicator. But I'm going to get one comment from Mr. Vijay Kedia. He's checking his phone continuously, which means somebody's trying to reach him. 2 minutes. 2 minutes. Yes, let's get a comment from you.
To me?
Yes.
Yeah. Okay, no, I think the the budget and the stock market is very much in sync. The FM has named all those sectors which are actually booming in the market.
Yeah.
So that we should understand, and it is in line with the government intention of putting India intention to India becoming 3rd largest economy in the next 5 years. So it is in line with that.
Okay. Nilesh, the number of fiscal deficit and capital expenditure, that number we just put up on the screen. Some would say that fiscal deficit is coming down because government would be spending less or collections would be high. Or government is looking at reducing the capital expenditure. That's only 2 ways you can come at this number of 5.1. Is this good news for the market, and especially for defense, railways and other sectors?
No, I think it is good news. Clearly, because what the market wanted was fiscal prudence. See, look at it. The expectation was that this is an election year. The government is going to be populist. But it's not been populist at all. And prudence has taken precedence over populism. So I think 5.1 is the big picture. And that, I think, is a remarkable number. The fact that the outlay on public capex is still at 11% on a base which is so big. The base itself has expanded because the government spending on public capex has gone up at least at 20% year on year for the last 4 years since FY21. And on that base to have an 11% hike, I think is quite phenomenal. That 3.4% spending as a percentage of GDP itself is double versus where it was a decade ago.
Yeah.
So look at it from those point of view, and it's quite phenomenal. Also, I think the government has played the role of a Pied Piper by first making the investments. I think now the acceptability of the sector is increasing, and now you are going to see private capital come in and invest in the infrastructure. So maybe the government spending at 20% growth is not required. But the fact that it has spent 20% year on year for the last 4 years and now is still spending 11% is going to still now attract a lot of private capital. to the infra space. And I think that's clearly where there is prudence and pragmatism in basically the government's approach and the government's outlook. And I think from that point of view, it's a perfect situation to be in.
Okay. Sunil, I want to go back to that whole point of the fiscal deficit maths versus the capex outlay. The whole hallmark of the government essentially has been post-COVID that you've really kick-started the economic growth momentum with the help of government capex, roads, bridges, railways. Will markets be happy with this capital expenditure number of 11.1 and the fiscal deficit number of 5.1 for next year?
So, Nikunj, if you actually see, tax collection have trended up much better than what the government had expected. And I think it's a very pleasant surprise because in the past we have seen, finance ministers sort of being optimistic over the tax collections and then, falling back. Now we have a situation where, the expectations are reasonable and then tax collections have come up higher. And I think that is the reason why fiscal deficit, even in this tough year, has come in at 5.8 vis-a-vis 5.9. This is an interim budget. So, obviously all the numbers are sort of an approximation. But Nikunj, 2-3 things have happened. One is obviously the outlook on the Indian economy is great and therefore tax collection should be decent. On the other hand, you also have subsidies which have just about vanished, except the food subsidy, which is essential for a poor country like India. So there's hardly any fuel subsidy. The fertilizer subsidies have come down because fertilizer prices globally have been pretty weak. And on the other hand, because of what has happened on the investments of the government, on the PSU investments, I think the balance sheet of the country is phenomenal. So if there is any gap, I think there is more than enough room for the government to be a little bit more aggressive on its disinvestment plan and ensure that this fiscal prudence is met. There are other reasons also, you have companies like Air India, which is to eat into the government finances by making losses of 30,000-40,000 crores. They are out of the balance sheet of the government. Railways have started to launch products which are well accepted by the population, but also are profitable, like Vande Bharat. The higher fares are being accepted, and I think that makes the railways also sort of self-funded. So I think all in all, this whole, the guideline which the government had given of fiscal deficit touching 4.5% by FY26 seems to be on track. This capital expenditure, whether it is 11.1 or 11.5 lakh crores, I think we'll have to see, because it's as we all know, it's an interim budget. So we should not be too disappointed that it should have been 15% growth rather than 11% growth. I think this 11% growth or a 10% growth is significant compared to the given the fact that last year we had a 33% jump in the outlay. So we have not only maintained that, we have grown at 10-11% over that. So I think all in all, I think the direction is very clear. The clarity which the government is very, very clear. We have not done too much of changes, which again is well accepted, because no one has to do anything. It's business as usual, it's life as usual. And obviously we'll have a full-fledged budget post the elections, maybe in June, July, which will lay the roadmap for the next 5 years in a more detailed manner. So, at least personally, and as a firm, we are very, very pleased with what has happened. And I think this was expected, and that's why you're not seeing any movement in the markets per se, though the bonds have surged, the yields have fallen by 10 basis points, which is again good for the financial markets.
Bit of an uptick actually in the bonds, and at an index level nothing has changed. On the futures we're still at 21,800 plus, as the usual names which were which were in the green when we came into trade, they are the only ones which are actually holding out in trade. So it's Godrej Consumer Products still at a 9% gain, Dabur still at an over 5% gain, Shree Cement, excellent set of numbers, and it's pretty much been a sectoral trend. We all saw what ACC Ambuja did. Shree Cement still holding up 4%. Maruti has jumped up quite significantly, 3.6% higher, and Marico as well higher by about 3%. I'll come to the losers list in just a bit. But Mr. Kedia, you should be happy. Tourism got a special mention. Your Kulja Sim Sim pick was Indigo.
Yeah, of course.
Will you add more?
No, I will not add more. I wouldn't like to increase my costing, So I'm happy with whatever is the outcome of the budget. And so I'm happy about it.
Any new ideas hearing the finance minister today that you got?
No, nothing, no new idea, because I was not expecting any new idea to come also. So mantra is same. All season mantra is one only, that सोच कर समझ कर invest कर, rumor पे टिप्पे ना time waste कर, knowledge और patience का business है ये, long term की सोच और rest कर.
एक चीज भूल गए कुछ भी करो 18 नाउ देखो ये लाइन तो पल्ला भूल गया
और अपने कविता को 18 नाउ पर टेस्ट करो.
By the way, you
Full
always tell
marks
me
on your test.
Okay, Prashant, you always tell me that ET Now is your favorite channel.
Oh, yes.
Why is that?
Because of
A lot
us?
of, one reason for me personally, when I enter ET Now studio, I feel energetic. It's something in a different mood. And I like, Nikunj is a fantastic
What about
guy,
Aisha?
always relaxed.
What about
Best
Aisha?
friend.
Of course, she
Yeah,
is
pair,
a
you
pretty
both.
woman, young woman, and it's amazing to be in the studio, and I feel so comfortable.
So we are blocking you for the next budget already. I'm coming to you, but Sunil and Prashant, we have this nice little game which all of us have played called Khulja Sim Sim. All of us have played this game called Khulja Sim Sim. Are you both ready for it? And I can see that, the backdrop at Sunil Bhaiya's, there is already a Saraswati and there is a Ganeshji. So, he's got a little bit of spiritual feel also going. And with Prashant's firm, I'm saying that it should not be 3P, it should be 4P because he's invested in PSU stock. So, firm ka naam, because that 4th P is done very well for him. So, I'm going to open a Khulja Sim Sim. And Khulja Sim Sim is something which is an idea or a theme somebody is very bullish on. So, I'm going to just open the Khulja Sim Sim first for Prashant Jain. So Prashant Bhaiya, what do you think will come out in your Khulja Sim Sim when we will open it for our viewers?
I think these are fairly valued markets, and I don't see any low-hanging fruit, to be very honest. I mean, the multiples at which these markets are trading. I still think banks that have lagged should do well in this cycle because balance sheets are healthy. Credit should pick up. And so I think large caps and banks I would prefer.
The Khulja Sim Sim, Prashant Bhaiya, yours is just about getting ready, Prashant. So I'm going to go to Nilesh. And Nilesh is also just about getting ready. Budget day, the speeches got over slightly early. So I think they're just taking some time right now. What do we have now? We have the Khulja Sim Sim of Nilesh Shah. And Nilesh's Khulja Sim Sim has Heritage Foods, Mahindra Holidays, and Home First. So this is what the Khulja Sim Sim of Nilesh Shah contains. I like the line, Nilesh. And I like the ideas in it. Heritage Foods, Mahindra Holidays, and Home
Nilesh
First.
is always about consumption. Home First is a new one though, right?
No, it's been there. We've been owning it for some time now. But clearly, I think in this budget also there was a very strong focus on mid-income housing.
Yes.
And clearly Home First is at the forefront of that. It is a high-quality lender, has been very capital efficient, credit cost contained, has been using technology to essentially reach out to their consumer segments and evaluating credit. And therefore, I think on the whole, it's pretty much, you could call this a new age company in a conventional business.
Now the Khulja Sim Sim of Sunil Singhania is also ready. And we've not spoken to Sunil Singhania. There's something which even Sunil doesn't know what will happen because जब संदूक खोलते हो तो पता नहीं होता है ना अंदर क्या होता है. Nobody knows what comes out. So Sunil Bhaiya, let's use the word digital locker. Right? Everybody is using the word DigiLocker, so I will use the word DigiLocker. So what do you think if I'll press the word and the code word is India, right? So on this DigiLocker which belongs to Sunil Singhania, I'm going to write India. So what do you think Sunil Singhania will come from Sunil Singhania's DigiLocker?
No, I think be positive will come out. I think last 20-25 years, whoever has been positive on India has had good health, good wealth, and a lot of smiles. And I think we have entered a phase where consistency in terms of governance.
Okay, so let's open it up.
No, it's practical. Nothing is theory. Ultimately returns. Returns are made by being consistent, being simple. I think we try to complicate matters too much. But it's the same thing, nothing has changed. I think we continue to be optimistic on, I agree with Prashant, large cap financials have not performed. I think they are set. We will continue to believe that massive investments is going to happen in variety of sectors, whether railways it will continue. Now we have solar rooftop which will continue. So I think a lot of these companies which are normally not favored might come into favor. The way PSUs came into favor last 2-3 years, I think the engineering infra companies will be in favor. And at some point of time, particularly the discretionary consumption has lagged. And I think as India moves ahead in terms of GDP, the disposable income will rise. I would say the want-based consumption names look pretty good from a 5-10 years perspective.
Simsim, what we actually had planned for Sunil Singhania is this, and Sunil, you may want to see this recording later on, you're live right now, is manufacturing and large cap financial. These are two themes which we thought Sunil has liked them. If you want to look at your declare portfolio also, that's the bent which seems to be clearly there. Now the Khulja Simsim of Prashant Jain is also ready, the DigiLocker. And I would again write India here, the DigiLocker of Prashant Jain. So Prashant, what do you think will come out of it, apart from PSUs?
As I said earlier, I think India's capital formation is growing faster than consumption, and which is good for us. That's a sustainable way to grow. Large banks have lagged in India, and I think they will do well. So anyone who, and as you can see, given the last NPA cycle in corporates, many banks have defocused on project financing. I think that's a space that will grow in any institution, any bank or NBFC that focuses on that space. I think there should be very good growth in that opportunity. So I would favor large banks, NBFCs focused on funding capex in India.
The word which we were looking for, Mr. Jain, was power. Another P to your firm's name, PSU and power. Though 5 P ho gaye. 3 P which represent your firm, patience, prudence, perseverance, then it's PSUs, and then it's power. This Simsim has got magical effect, Mr. Jain. Simsim is getting all the thoughts right today. Right, Mr. Jain? Power is what?
Nikunj,
tell us why.
No, your thought process is commendable and your observations are very interesting. I think, see, power space it will grow for sure, and power demand in India should accelerate as incomes grow, as electrification takes place. Even AI will consume a bit of power. But we must appreciate that this is a business with fairly controlled ROEs. And I think this sector is re-rated. It's not expensive, but I would expect the re-rating to take a pause. And I think compounding returns should continue in this. And that's why I did not mention this.
Okay, Prashant, Sunil, we'll let you both go. Thanks as always for taking the time out and joining us for a quick budget reaction there.